How can a small Chinese company like ZEPP Health compete with the big players like Fitbit or Garmin? How are they positioned, especially in Western markets? This is part of the questions in this part of the interview with the CFO of ZEPP Health that I've done during my visit in Beijing earlier this year when I was invited to their headquarters in Beijing. And you can watch the whole interview bit by bit here on this channel, but you could also opt to support this channel to support like this type of due diligence, actually visiting these companies, doing my own research on the ground by becoming a patron. And then you'll also get immediate access to the 1 hour interview. That's something you can do. Otherwise, feel free to watch these series bit by bit and, make up your own mind whether or not this is a company worth an investment. Is it fair that the company is trading at roughly 70 million valuation while their cash assets are much higher than that and the company is close to 1 billion in annual revenues? Well, that's up for you to decide. And I hope such interviews can bring more clarity. With that, have fun watching this part. Where would you say what's the status quo of, compared to what is your target, what you envision, like for example the engagement of the community or the status of marketing? Do you say this is also still in the very beginning, or would you say you already have found like the metrics where it makes sense to invest more, for example, in let's say Instagram ads? Who knows?
I think we're much advanced than a lot of the Chinese tech companies who wanted to go overseas.
Okay.
Right. Actually, we have our own salespeople. We have our own channels built. We have our own D2C model built in Europe, in United States. Much more advanced.
Since when?
We actually started the journey 4 or 5 years ago already.
Okay.
Yeah. But if you ask me to rate on that, for sure we're actually much better than our competitors. For example, Xiaomi, Huawei, etc., etc. Right?
But as good as the Western competitors, let's say an Apple, the king of marketing, Fitbit, Garmin.
No, I think we're different, right? Yeah. Because Garmin, take Fitbit and Garmin, they actually invest very heavily. They're still applying the traditional retail promotion and retail sales very much. So basically, they go into Best Buy, they go into Media Marts, etc., etc., and then they have to pay a retail margin in order to get the listing, etc., etc. But we are actually more into the digital marketing part, more into D2C, more into Amazon, more into online or omni-channels in those markets, which are also very much popular at this moment with the mainstream age groups, which we try to target is those between 20 to 35, right? They are very much the digital nomads. I mean, they are very much used to apps like TikTok, Instagram, Facebook, and YouTube or whatever, right?
So it seems very targeted at a Western audience, but you're here in China, you're a Chinese company, and what are the plans for China as a local market? It's, for example, Amazfit is not super visible here, right? Do you have the strategy to only focus on the overseas market, which is a big chunk of your revenues now, or do you also, for example, we briefly talked about, it seems like the Chinese economy is picking up here, and maybe towards the end of this year. Do you strategically position for that, or do you say, well, our main customer is overseas and will continue to be there?
No. So I think we. Maybe I will give you a long answer to your question, right? So I think the reason why. Let me just talk about 3 markets, right? Let's just split the world into 3 big parts: U.S., Europe, and China, right? I think in U.S. we have a unique selling point whereby there's most of the Chinese mobile phone players cannot play in U.S. So for example, Huawei, Xiaomi, etc., etc., Oppo, Vivo, all those brands you have heard, they cannot play in U.S. Actually, in U.S. we kind of beat Fitbit many years ago on the bet. using the Mi Band, right? And now we have to actually do this journey or repeat that journey one more time on smartwatches, taking the share in Garmin, in Samsung, and from Apple Watch, right? Which we believe we're in a good way in doing that. Actually, our market share in the United States has grown from 0 2 years ago to roughly 11% by the end of 2022, right? So I think US is actually very good market for us to penetrate and to actually gain market share even more in this market, right? And I think we have a unique opportunity here, right? Europe is a different thing. I've told you more than half of our revenue is coming from Europe, right? And also, given the changes which has been recently applied on Samsung Galaxy Watch, and also the different geopolitical issues with regard to Huawei as a brand, right? And also our outdoor ranges, which is a good replacement for the Garmin high-end watches, right? Europe will continue to grow as our bread and butter.
Okay.
Right? China, I think most of you probably don't even know the Chinese market. China is a very, very tough market for consumer electronics products to compete, right? Either it's a price war or it's going to be a different type of product which you need to have a unique selling point, etc., etc. China is actually, the competition is very tough, but we tried to, now, the reason I'm sitting in Beijing and the company is headquartered out of Beijing kind of warrant that we have to be a China play one way or the other, right? So we'll target on certain higher ASP products. We'll try to focus on the profitability in China, and then if we can grow in China, if the macroeconomy kind of situation improves in China, for sure we're going to ride that wave, right? So these are on very high level how we want to, obviously we have a different place for India, for ASEAN countries, etc., given our global presence, right? But these are the three key markets which we want to play and hedge differently.
All right. Good. So this is mainly on, let's say, the hardware product, which we all know about, which is very visible, and I think which is also, very assuring in a way from an investor's perspective, because you can actually go in a local store and check out a product, or you can even read Amazon reviews in English. And I think there are mixed reviews, so some of them are very good. I think the product has received very good comments, but also, of course, there's always negatives as well. And I think one of them might be in the area of software, and it's, I think, not so long ago that since ZEPP Health actually has started to have a CTO. Is this right? It's maybe a year now.
Yeah.
And your own OS.
Correct.
And what's the strategy there?